Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, June 27th. Mixed trade here overnight, just more of the same in the corn. New lows for the recent move, down about a penny now, actually firming up a touch as we head closer to the pause. Mixed trade in the bean complex, up 2 to 3 in the beans, down about $1 in the meal. Bean oil prices about 30 to 40 better. Mixed trade in the wheat, up 2 to 4 in Kansas City and in down 2 to 4 in Kansas City, up 2 to 4 in Minneapolis and in Chicago. We do get export sales here at 7:30 this morning, as well as an update from Stats Canada on their 2024 acres. Speculative traders continue to press the downside here in corn, selling another 5,000 contracts yesterday, extending that short position out to about 240,000. However, that's still well shy of the record short of 340 this past February. U.S. weather just remains non-threatening for much of the nation's midsection. We do look for drought levels to remain near historic low levels here with this morning's update. For now, extreme heat seems to be limited to the deep south. Above normal rains look to return to the northern plains and northwestern corn belt by early next week. Brazil's second corn harvest continues to move along a rather rapid pace. Hot, dry conditions are expected to return for much of Ukraine and southern Russia as we move into July, which could start to lower corn production forecasts here. Yesterday's EIA report showed ethanol production slipping to 307 million gallons last week. That was down about 1% from the previous week and a year ago, and coming in just below the levels needed to reach the USDA usage forecast of 5.45 billion bushels. This wave down in wheat prices has started to attract some global demand interest. Earlier this week, we saw Egypt buy 470,000 metric tons of wheat. Algeria is believed to have bought up to about 150,000 metric tons yesterday. This morning, we're seeing tenders from Jordan, 120,000 in Saudi Arabia for nearly 600,000 metric tons, that for fall shipment. Tomorrow's USD report, the market is expecting corn acres to increase about 300,000 from the March intentions to 90.4 million acres. However, that is still down 4 million from a year ago. Our estimate is very much in line with this forecast. In soybeans, acres here are expected to jump about 400,000 to 86.75 is the average trade guess, and that is up just over 3 million from a year ago. We are actually looking for about a 400,000 acre drop to 86.1 due to flooding and most notably up in the northwestern corn and bean belt. June 1st stocks expected to come in well above a year ago for all three, corn, beans, and wheat. Tomorrow's report often generates some rather volatile price swings, and as we head towards the all-important July weather. Historically, corn and wheat prices do have a little bit of a downward tilt off this report. Soybean prices have a little bit of a higher lean here in the last 20-25 years. More of the same here in corn as prices try to seek out levels to attract a little bit more demand interest here on new crop with weather forecasts again non-threatening. Wheat prices are back down near their winter lows. In the case of Minneapolis, we have carved out new contract lows, the lowest levels now in 3 years. Probably have to get this year's winter wheat harvest behind us before we can confirm some sort of a bottom here. And at that point, look for the market's focus to start to shift back to tightening global supply. So big USDA report day tomorrow. Thank you for listening, everyone. I hope you have a wonderful day.